Good afternoon, and thank you for joining us today. We're going to be talking about the Medicare cost report for home health agencies and the PS&R report that you obtained from Medicare as part of that preparation. My name's Mary Reyes, and I'm the Director of Operations here at TAD, and it's my pleasure to present this webinar with you today. I'm also happy to introduce Alexandria Rochko. Alex is one of our accountants and has been with us for over 14 years, preparing all of the accounting and cost reporting for home health agencies. TAD was founded to provide an option for home health agencies to outsource their billing, accounting, and consulting services to industry experts. We have a lot to share with you today, so we're going to get started. All of our attendees are in listen-only mode, but please feel free to send your questions to us throughout the webinar via the question box that you have on the right-hand side of your screen. At the end of the webinar, there'll be a questionnaire that pops up. Please fill that out. We are always interested in knowing people's reactions, and if you have any questions or would be interested in having a follow-up call to discuss services, we'd be happy to do that. So without any further ado, we're going to get started. So again, as I said, we're going to be talking about the Medicare cost report specifically for the home health agencies. The Medicare cost report is an annual filing that Medicare requires. You must file it in order to maintain your certification. The information used within the cost report is what Medicare uses to set the reimbursement rates. It's important for you to complete this and to complete it accurately so that Medicare has the appropriate information to set those rates. It's important to prepare it timely and on the accrual basis. What the accrual basis of accounting method is based on that it ties your services with your expenses at the same time. So if you are providing services and you're collecting them in the future, or you're collecting them in advance, like for a wrap, those revenues all need to be allocated and adjusted to tie to the expenses, like when you pay your payroll, or when the services, when your employees were working, not necessarily when you paid the payroll. Cash basis is always recording revenue and expenses as you pay them. Accrual basis is as they occur. And in our industry, you would be surprised at how many incomplete or incorrect cost reports that we see. When we prepare a cost report for a client that we don't do any of the accounting, it's a new client to us. Either they're newly contracted with us for billing and accounting services, or it's just somebody who is coming to us to have their cost report prepped. It's amazing how many that we look at prepared by other vendors that are incorrect. A lot of them are prepared on a cash basis. A lot of them don't properly allocate the expenses that need to be identified specifically, like marketing and other non-allowables. Also how you treat vehicles, various different things that we're going to go over. But it's amazing that I see so many of them incorrect. And part of that is that they don't have good accounting records, or they don't understand the proper nuances of what Medicare's regulations are pertaining to filing the cost report.
One more thing too, Mary, of experience, past experience, I've seen where other accountants, because I've worked at other CPA firms, as you said before, they don't understand how important you have to break out your payroll by discipline. You also, I've seen cost reports that doesn't even have an AR. They may not even have the accounts payables on there, which is all part of accrual. And a lot of these accountants think, like a tax return, they think there's an extension. There are no extensions on cost reports.
Good point. Good point, Alex. Alex is going to take over the next section. We're going to talk about the PS&R registration. The PS&R stands for Provider Statistical Reimbursement Report, And that is obtained from Medicare, and the information pertained in it is definitely a key component to the cost report.
Thank you, Mary. As Mary said, the PS&R is Provider Statistical and Reimbursement Report. It's very important part of preparing your cost report. In years past, it used to be mailed to your office, but in the past 5 years now, and past, I would say 4 years, they've made it where it has to be electronic. There's no other way you can get it. But if you're a new agency, we highly recommend that you get going on registering because you have to register first to get your PS&R and to be able to log in. And there's a certain ways you have to do it. So if you are already an established agency and you already know the login, I will show you how to pull the PS&R in a few minutes. But this pertains to brand new agencies that has to register to get going. And that takes 2 to 3 weeks. And so with cost report season around the corner, it's very important to get going on that. The first thing you have to do is go to https://portal.cms.gov. There you would see the screen. And because you're brand new, you would push the blue button where it says New User Registration. Now, from there, you would choose the application, because now with CMS, once you're registered, you could be registering, or you could be doing anything from an 835A to maybe changing something with your agency, or you could be doing like this, a PS&R, and you would choose step 1 is the application. So there's a pull down, and in that pull down, it will say you'll choose the PS&R /*. And again, Provider Statistical and Reimbursement System for tracking, audit, and reimbursement. That's what you're going to choose. And then they'll come up with the terms and conditions, and you'll hit agree and hit next on that. And then here is basically starting the registration. And here at TAD, we recommend that it's either the administrator or the officer of the agency to fill all this out. And when you fill all this out, there's maybe, I think, 4 or 5 steps you got to go through to fill it out. And it's pretty simple. And after you fill it out, you send it. And in this, they'll ask for your email address. Say the owner's filling it out, or the officer is filling it out. They will ask for an email address. Please pay attention to your emails. Even if you don't recognize it, make sure you look maybe every week or every 2 weeks after you fill it out, because you will receive an email from them. And in that email, they will ask you that they need a form CP-575 or an official IRS letter, where this is an acceptance of an S corporation example. And you need to send this copy. You got to make a copy, and you have to send this to them. Now, once you send this to them, that is telling the CMS that you do exist and that your company does have a tax ID, and you do
it's the legal name, and that there is another government entity that is confirming your existence.
Yeah, thank you. And you will mail this to them. They will give you a mailing address, and and we recommend that you certify mail this. Now, once you send that, in about a week or 2, I would say, you'll get an email back. And what it'll have is a temporary password. The user ID will be your user ID, but a temporary password. Then you will log in again to https://portal.cms.gov, and you'll pick the secure portal. and you'll log into that, again, you'll log into that password. And then once you do that password, we recommend you do your own, whatever you want for the password. Now, again, the same website is also for the agencies that's already registered. And every 60 days, you have to change your password. You get emails. Again, make sure you see your emails because they give it to you a few days in advance to let you know to update your password. And you have to have this updated. If you don't have it updated, what happens is you'll get locked out, and then you'll have to call them to unlock you. And it's better to just make sure every 60 days you update your password with them, and you're good. And again, we recommend that it's the administrator or the owner that's doing all this. Now, once you have that information, around, we recommend here around March or early April, you'll log in to www.psnr-ui.cms.hhs.gov/. From here, you'll put in your user ID and password, and you will come to the Provider Statistical and Reimbursement System, and it'll say welcome. And this is where you're going to pull your PS&R. And from here, you're going to choose the request report. And it's in the middle, like a middle grid. And you'll press that, and then the next thing, there's another grid, and you'll request a summary. Now be careful, because there's also either request summary or request detail. Now if you press detail in error, and you're an agency that's been around maybe 10, 12, 15 years, you are going to get sometimes 1,000 to 2,000 page report. You don't want that one. Usually right now we're noticing it's only a 9-page report when you do the request summary. Because also with the PS&R, it's, besides cost report, it's also a good tool for management. And you'll see why we're saying that, because there's other things for during the year that you can see, like what how many wraps that were billed, how many finals were billed. You can see your disciplines in that, and how much was billed based on those disciplines in that too. So, but for now, with the cost report, you want the request summary. Then you'll go and you'll hit next, and then it'll you'll by service type, and it's a bubble, and you press that. And next to that it says all, and you want all. And you scroll down to continue. Now, excuse me, from there, there's an interval. And to the next, you will want year, and you'll want to type 1/1/2017 and hit apply. Now, it'll blink for a second. And when it blinks, it's going to have a grid of boxes. And you want to exclude the periods 2, 3, and 4. And the reason for that is that's 2018, 19, and 2020. And basically all that's going to be is extra paper that you don't need. All you want for this one is 2017.
Excuse me, Alex. I had a client send over a PS&R that they ordered up this year. And instead of the interval of year, they put the interval of month. And because there's only 4 periods, they had 4 reports, one for January, one for February, one for March, and one for April. So obviously I would not be able to use that data for the cost report. So in this situation, the interval, if you're using the PS&R for other review for management, you can pick different reporting intervals, and that's why you have an option for the different periods and different, you could do quarterly, and each one would be a quarter. But for cost report, for most concise information that we would need, the year is where you want to go.
Yes, exactly. Now, then you would scroll down and hit enter, and then the next page is the pay dates as current. You want to keep as what it says. And then you'll go to the next screen, which is screen 4. And here at TAD, what we pick is it's for the report format. And there's either a PDF, a bubble for PDF, a bubble for the CSV, or the PDF and CSV. And we choose, we recommend we choose the PDF and CSV, because basically what you're choosing for your accountant is the PDF portion of it, and that could be for you. And the CSV is like an Excel format. And if you have the program, or your accountant has the program for the cost report, it's really nice, and it can be downloaded into their program for the CSV. So we recommend that you choose the PDF and the CSV. Then you hit enter, and you'll go to number 5. And basically this is all the reports that you chose. It'll show you the numbers of what the reports are, and you'll hit confirm for that report and submit it. Now from here, it will take, right now, if you choose it now, it's kind of early, but like we recommend, because you want to make sure all your billing's done for 2017. So we highly recommend early April or late March to pull your PS&R. But if you pull it right now, it maybe take, I would say 10 minutes. But starting in March and April, it'll take like 24 hours. So you would have to log back in. And again, it's www.psr-ui.cms.hhs.gov/ and there will be a report waiting for you, and then that's where you pull it to retrieve the PS&R. Now, again, if you forget anything that I was talking about, or if you forgot to update your password, you would go to the service desk, you would call them, because you'll be locked out. And it's 1-866-484-8049. And what they'll do is they'll unlock you. They'll give you, again, another temporary password by email. And then you have to log in and update your password first. But if you're new in a new agency, then and you got to get going and register, that's https://portal.cms.gov. Or that website too is to change your user ID or password. And now I'm going to turn it to Mary Reyes.
Thanks, Alex. We're going now into the actual information that's going to go into the cost report. As we said, you want to be able to compare apples to apples. So as we go through, we're going to be talking about different areas of the cost report. The cost report consists of basically 2 different areas of information. Your billing information and your accounting information. So first, your billing information. We're looking for statistical data, and that data comes from the PS&R report, like Alex was just telling you how to acquire. That information on the PS&R is the information of episodes billed and paid in the reporting period. So they had to end within that reporting period. So your end date would be December 31st, 2017. And that's why we recommend waiting till March or April to pull your PS&R report, because just because the services ended 12/31, you probably didn't final bill them and get it paid. So that gives you, a couple of months to be able to finalize your billing. The other information comes from your management software, or if you don't use a software to do your billing and report your data, you would need to be accumulating this information in a different method, via Excel spreadsheet or some other form of tabulation. What we're looking for and from your agency is visit counts by discipline and by payer, and patient counts by discipline and by payer. And what that means is if you have a patient, patient Sam Smith, and he had Medicare at the beginning of the year, and then he changed to a Medicare Advantage plan later in the year, and he had services, both skilled nursing and physical therapy, under Medicare, and then under the Medicare Advantage plan, he had skilled nursing and aid visits. So that patient would be counted once under your Medicare and once under your other, but only once under your unduplicated count. But you also have to report those visits by the payer and by the discipline as well. Here's a grid that shows the difference between your agency records and the PS&R records. And remember, I was talking about a lot of those cost reports that were prepared incorrectly. This is an area that is very common for those who don't understand what Medicare is looking for the errors to occur. A lot of people just take the visit counts and the patient counts directly from the PS&R and use that only on the cost report, and that's not accurate. And this is why. In this example, we have 3 years in our grid, 2016, 17, and 18. And as you know, you're treating a patient for a 60-day period. So at the beginning and the end of the year, you have episodes that cross over those date parameters. So like in our episode A, it started in 2016 and ended in 17, and we have visits reported in both periods, 16 and 17. Episode B occurred completely in 2017, so all of those visits are reported under 17. And then example C started in 17 and ended in 18. So you see that there's 5 visits that occurred in 2017 and 20 visits that occurred in 2018. So under this grid, we're looking at the service date, not the episode range, not the payment date, but the date of the visits that they occurred. So on your PS&R information, because A and B ended in 17, it will record 2 episodes, and it will record the 65 visits, the total visits for both of those episodes. Your agency data needs to reflect 3 episodes and only 40 visits, because those are the visits that occurred in 2017. Not the 90 visits that occurred for all 3 episodes, but only those that occurred in the year, the reporting year. So as you can see, there are definitely different information that's on the PS&R and on the agency records. So it's important to have both sets of statistical data reported correctly on the cost report. The next thing we're going to talk about is the financial data. The financial data are your accounting records. If you have good accounting records, it makes preparation so much easier. If you don't, or you find that you struggle at the time when it's time to prepare your cost report or even your tax returns, we at TAD have a full accounting bookkeeping service where we can do all of that accounting throughout the year and go right into cost reports and tax return preparation without inconveniencing you as an agency owner at all. So it works out really nice for our clients to go right into that. So when we're talking the financial data, one of the things that we need to stress is the first year agencies. If this is your very first time that you're filing a cost report because you're newly certified, then we need to identify a couple of different dates, and it just that determines how different expenses are reported. So the first date is when you decide to go into business. That's your date of incorporation or partnership development. Then there's the date when you start seeing your test patients. As you know, with Medicare certification, you have to have 10 trial patients prior to certification. So those are called your pre-certification period, and those are your test patients. And then you have your actual date that Medicare has granted you certification. Your startup costs are from the day you begin business up to your first test patient. It's taking longer to get certified these days. It's taken sometimes over a year. So a lot of people aren't dealing with startup costs. They're expensing those costs on their tax returns as in the year that they occurred to take those losses. If that's not the case, you can still capitalize those expenses and identify them and expense them over the first 5 years of your revenue producing years of Medicare.
Yes.
Your pre-certification costs is during that period of time when you're doing those test patients. If that occurs in the same year as when you get granted certification, we have to identify those costs, and those costs become non-allowable for that first reporting year. So what Medicare, again, like we said, they're trying to compare apples to apples. They're looking for the costs associated with the services rendered that generated revenue. So we need to identify those and treat them differently on the cost report.
Now, Mary, I have a question. What they're asking if their agency was certified on 12/1/2017, what would they do to file a cost report?
If your Medicare does grant for the first year an option to do a short year of fewer months. If you're certified in July, they're only looking for July to December expenses and such. I mean, you still have to report all of the costs, but you separate them out. But if you are certified in December, because again, we're looking for services where you've completed your episodes, there really isn't much that's going to be reported on a PS&R. So Medicare recognizes that and will allow you to do a 13-month cost report the following year. So if you were certified December 1st, 2017, you would not file a 2017 cost report. You would do a 13-month 2018 cost report.
Thank you.
Now, once we've identified whether or not this is your first year, this now section pertains to everyone else. Going forward for all cost reports, we're looking for all your costs of services. And then once we find and allocate your costs, we need to make some adjustments. So there are adjustments and non-allowables, exclusions. So with an adjustment, what we're first doing is adjusting things to be appropriate and treated equally among agency to agency to agency. So first we're looking for any excess compensation, and that would be your tax preparer or accountant might be recommending that you bonus out profits and take it as wages and as an owner, and that's all fine and well from an IRS point of view, but Medicare does not want to have your compensation distorted when we're using it as a statistical analysis. So what we first look at is who could be compensated in excess or even in reduction. Some owners choose not to take a salary those first couple of years, and that can also change the costs allocated to the agency. But first we're looking for owners or others could be family members of the owner or the agency or other highly compensated employees. We want to make sure that those wages are market value. And what that means is if you're the owner and you are managing your agency in the position of administrator, are you paying yourself the same wages that you would if you had to hire an independent person, an unrelated person, to be your administrator? There are a lot of different companies out there that do benchmarking, wage benchmarking. If you're not sure what other agencies do, you could call your state association and see if they have any compensation benchmarks. But the other could be just watching some one ads to see what would be the market value. But so what we're doing there with the market value, we would find this salary is allowable and the other has to be adjusted down. Depreciation. The IRS allows accelerated depreciation. Medicare does not. What depreciation is the expense of your fixed assets. So for example, a common one is vehicles. If you're buying a vehicle, the IRS and Medicare both say that vehicle will last about 5 years, and so you can expense it over 5 years. The IRS allows for accelerated depreciation, which means you can expense more of the value of that vehicle in the first 1 or 2 years during the life of the product, acknowledging that the value decreases as it ages. Medicare is looking not to reduce your taxes, but to equally report the cost of services. So they want to take that same vehicle and expense it equally in the straight line method over the 5 years or the life of the product. So you'd want to look at that when you're doing computers or office equipment or vehicles. Those kinds of things are what you would depreciate. One of the other things they look at is related party transactions. They don't care if you're hiring your niece, your nephew, your spouse. It's not related party of employees unless you're compensating them differently than you would other employees. What they're looking for is business relationships of closely related entities. One of the common ones that we see is the building that the agency leases space from is owned by the same person as the agency is owned by, or a portion of that. Staffing companies. Maybe I have my own agency and my husband runs a staffing company and I hire his nursing or his therapist to do my therapy work. Those are common relationships where there's a relationship between the owners who own the two entities that have a business relationship. These relationships have to be identified by Medicare, and they are treated, and there's a couple of questions. They're treated differently on their own worksheet within the cost report, and there's also questions related to that in the question and answer part of the cost report. The reason these are important, and this is an area of audit that they do watch for, is again, what are we using the cost report for? Statistical analysis. So you want apples to apples. If I am owning the building and I'm paying myself rent or foregoing the rent for that matter of my agency who's taking up some of that space, and Alex here has an agency down the street and she has to pay a third party for rent, we have different, there's a potential of a different relationship there as far as our data being represented. That's why the related parties are identified. And also to look to make sure that there isn't any kickbacks or inappropriate relationship as far as obtaining patients. One of the other areas that we see is the luxury vehicles. And what is considered a luxury vehicle, we follow the IRS guidelines as far as the dollar value of that vehicle. So something like a Mercedes or a Lamborghini per se, any of those are very costly and very, fall into the luxury component. Medicare is not saying you can't use vehicles in running your business or that you can't have them as an asset. What they're looking for is to limit that and not paying for the luxury component of the vehicle. Did you have?
Yeah, of the 14 years I've been here, we only saw one audit, and the one audit that our client had with the CMS for cost report was due, they were just chosen like a lottery. And unfortunately, they were chosen. And one of the questions was about mileage log with vehicles. Now, IRS level or for cost report purposes, you should always keep a mileage log. And so basically, I told my client that you just make copies of your mileage log and send that to CMS for the audit. But please always keep a mileage log of your vehicles that you're using for the business.
Thanks, Alex. And again, with the luxury vehicle, it's capping. It's not saying that all of that expense is excluded. A portion is allowable and another portion is adjusted. Now, another area that Medicare has is the non-allowable. And when they mean non-allowable, they don't mean it's not allowable to have these types of expenses, because you often, need to have marketing expenses. Sometimes you might run into a penalty. If you're a C corporation, you're going to be paying income taxes. So these expenses can occur and very often do occur within the agencies. It's a matter of whether the expense is going to be allowed into the computation for the cost per visit for the cost report. So the first one is the marketing expenses. You can have a marketer. This would include wages. It would include mileage if you're paying them, reimbursing them for mileage from traveling from doctor's office to doctor's office. It can also include the little goodies or giveaways that you might have. If you have your name on a calendar, on a magnet that you give out to patients, those kinds of things, those are all considered marketing expenses. They're good tools for running your business and keeping clients happy. You know, having your phone number on the refrigerator, it's probably a good thing. But you need to identify those through your accounting records to make sure that you're reporting them appropriately.
I see a lot of our clients, what they do with the marketing, it starts going up around November and December because that's Christmas time and the seasonal time. And a lot of them, they either have Christmas parties, or a lot of them will do calendars, like Mary was saying, you know, little trinkets for people. Well, a lot of them do the calendars, and they'll have their name on it and their information and their phone number, and they give that to their patients. They give it to their doctors. And also I see a lot of clients that'll do like mugs, and they'll give it, and they'll with pens and stuff around Christmas time, and they give it to like the doctor's offices, and they'll also give it to their patients. And that's when it increases the most, is around November and December.
If you do a lot of marketing, the one thing you want to be very cautious of is the Stark regulations. The Stark regulations are the regulations that monitor for kickbacks or excess, that you don't want to be perceived as buying your patients. So if marketing is something that you do a lot of, just be aware that you might want to do a little research on the Stark laws. Mm-hmm. The next area of non-allowable expenses would be penalties and contributions. The penalties would be tax penalties. It could be traffic tickets, parking tickets that you might pay on behalf of your visiting staff or something along that line. But again, it's not related to patient care. And it would be non-allowable. Contributions also are non-allowable. They're, wonderful things to do for your community. You're providing a wonderful service for our senior citizens, the majority of senior citizens, and making contributions to different resources can be part of your marketing campaign as well. It's a wonderful thing to do, but it needs to be identified and excluded off the cost report. Income taxes, C corporations have to file federal income taxes. Some states also require state income tax. Any tax associated to revenue is going to need to be identified and eliminated from the cost report. And then they have the caveat of the unnecessary and or unreasonable expenses. So that's something else that might be coming up. Again, what Medicare is trying to find is cost of treating your patients. So something unnecessary or unreasonable would need to be identified and excluded off of that. All of these non-allowables are reported on another worksheet within the cost report. An example of an unnecessary expense would be a company-sponsored daycare center. Maybe you have a lot of your visiting staff have young children, and you're deciding, in order to keep your staff, because sometimes it's hard to find skilled staff, that you decide to put in a daycare center. And you have an extra office in the corner, and so you convert it over to a daycare center, and you hire teachers for the daycare center. Any cost associated with that daycare center would need to be identified and excluded from the cost report. Now, those were the expenses, detailed and itemized and such. The other information, financial data, There's worksheets for your balance sheet and a summary profit and loss report. Those are summarized based on other data coming from the detailed reports that you do. But they do want to see a complete accounting records from not just the cost of these services, but the cost of running your company and your assets and liabilities on your balance sheet. The cost report used to also have a questionnaire section of it. They have, for home care, have excluded that. They've eliminated it, and then they have replaced it with one worksheet called the S2-1. And in that is just basically, I think, about 5 or 8 questions, 5 to 8 questions, I think.
Yeah, no, actually it's 4 now.
4 questions.
4 questions. Yeah.
4 questions on it. And again, they're asking about ownership changes, changes in accounting method, anything that would have changed your data from one year to the next. They're doing that. This is also an add-on to the S2-1, is the first time ever they're actually asking you who prepared your cost report. Nowhere in previous cost reports was the preparer ever required to sign or give out their information associated with that cost report. Here they do. They do ask for the preparer's information. It's nice because they're asking for email address, and there was a couple of times where Medicare received the cost report, but they could not read the electronic file. They received everything, and they received it timely and everything else, but they couldn't read the electronic file. So they sent us an email stating that, and we were able to electronically send them via email a new electronic file, and the client's cost report was then accepted and carried forward. In the past, they would have been notified to the agency, and the agency would have to then get to the, contact us to get anything replaced. In fact, I had a client come to us in August because the preparer that did their cost report, it was rejected. The second one, replacement, was rejected. And when she needed a third one, the person stopped taking her phone calls. So she was not able to, she was on a penalty withhold on her, she wasn't getting any Medicare reimbursements until we were able to get involved and prepare her cost report. And I was able to, because it was a slow time, we were able to get the cost report prepared in just a few days and get it over to Medicare. And within a week and a half of her getting us involved, we were able to get Medicare to release funds to her. Excuse me. The signature and filing of the cost report, the agency owner or director needs to be the one who signs the cost report, and it needs to be, it's not the person preparing your cost report. Filing, even though they get an electronic file, it's not your preparer who sends that file on to Medicare. It must come from you, the agency, because it needs live signatures. We don't have, it's not like the IRS. Medicare is not set up for group filing from preparers at this time. I don't know if that might happen in the future, but it doesn't happen now. Mm-hmm. The cost reports are due 5 months after your fiscal year end. So if December is your year end, May 31st is the due date. There are no extensions. Alex mentioned that earlier. Mm-hmm. IRS will extend your tax returns, and we like to have the tax returns finished before we do the cost reports, but it's not mandatory. If you do not file your cost report on time, Medicare will withhold 100% of your funds.
Yeah, and just from experience, it's first come, first serve. So if you're having someone prepare it for you and it's like June 15th and you finally get it over to them, but there's other people ahead of you, they will not accept it until they actually, do the desk audit and that. So you might not be able to get funds until July 1st. And so it's very important that you get it to them by May 31st and before that even. But also when you mail it, we recommend you either do like say FedEx, UPS, or certified mail, so that you know that they received it. And when you do the signature, it always and should always be in blue.
When you're signing the cost report, you're signing the certification, and that's why it needs to be by an officer. You're certifying that you've read the above statement, and in a second I'll have you read the above statement and what they're referencing here. But you're attesting that you have examined the cost report, the balance sheet, and all the revenue expenses for the agency for the reporting year, and that the records are complete, true, and accurate, and that you understand and are familiar with the laws and regulations pertaining to the home care industry in relationship to cost report data. So when you're signing it, you're signing that the information is correct, you understand the laws and regulations. The above statement that it references is this statement here. It's misrepresentation or falsification of any information contained in this cost report may be punishable by criminal, civil, and administrative action, fine and/or imprisonment under federal law. Furthermore, if services identified in this cost report were provided or procured through the payment directly or indirectly of a kickback or were otherwise illegal, criminal, civil, and administrative action, fines, and/or imprisonment may result. So what this is stating is that you're not falsifying information on the cost report. You're not trying to hide data on the cost report. Let's say you had those marketing expenses and you just put them into office expense and didn't identify them and properly classify them on the cost report. That's fraudulent. If you need to, they're not saying you can't have marketing expenses, you need to report it appropriately. So misrepresenting that information, the financial information is important. But also they go as far as identifying how did you get the patients, how did you provide those services. If you obtain those patients' records illegally or through kickbacks, that's where the Stark laws have come into play. You're also could be punishable by imprisonment and fine for a fraudulent cost report and fraudulent services. You send the cost report to your intermediary or your MAC. The normal steps, the closer you get to May 31st in your filing, it takes longer for these things to happen, but you should get an acceptance notice that they received your cost report on time and all of the appropriate data is there, and they can access the electronic file. They have not reviewed it, they haven't done anything, they basically have time-stamped it, that it was received and it's good to go to the next step. The next step is the review. It's either a desk review that could trigger an audit or it could go straight to audit. Desk review is the most common. And then once the desk review has been done, you'll get a settlement letter. If you file very early, those of our clients who get their cost reports done early April, they can go straight to desk review and sometimes even straight to settlement. So there's a lot of advantages to getting your cost report done early. You can have an opportunity to correct something that's wrong before the due date, so you're not penalized for financially, and you can go forward with the settlement. This is an example of what a settlement letter would look like. As you can see, there's no audit and it's settled based on the way it was filed. With home care, there is no reimbursement to the cost report, so there's not generally, unless there's a penalty for some reason, but there is no financial refund or payment at the end of a cost report like you can with a tax return. If you find that you need to change your reporting year, you need to petition Medicare for that. You have to have a legitimate reason, and it's at least 120 days prior to the date being impacted. So this might happen if you acquire a new agency and that agency is on a fiscal year and you want to change to a calendar year. you would need to petition the agency that way that you want your accounting records and everything to match with the new agency. And then you might have to file a couple of partial year cost reports in order to get all of your date range in place. If you wanted to go a calendar year, the 120 days puts you into September. So you would want to make sure you made that petition for the following year. So like if you wanted 2018 to be calendar year, you would need to file a petition now. If you wanted 2019 to be, you would have to do it before September, before the year end, like by September for 2019 year. One thing we've only been talking about the Medicare cost report and the Medicare cost report for home health. There might be other payers out there, state Medicaid programs that might require a cost report. We recommend that you always comply with whatever your payer sources are and those requirements are. Most other resources that I've seen, if they require a cost report, they're triggered off of the cost report for the Medicare. So you need to have your Medicare done first, then some of those numbers roll into those other reporting facilities. So you want to make sure that you watch for that and comply with those reporting requirements. So we've covered a lot about the cost report. We can take some more questions and answers if you have any questions. Just remember that the cost report needs to be on an accrual basis. You should have a reputable provider that understands cost reports. Not every CPA out there is familiar with the cost report. If you have a hospice and a home care and they're the same entity, there's a lot more involved in that cost report because you have to have the hospice subschedules. So there's a lot to know about the Medicare cost report. We consider ourselves experts in our industry because that's all we do is home care. So as you know, TAD is an accounting firm. We've been around, the owners of TAD have been they're CPAs, and they've been CPAs for over 30 years. They specialized in home care at the CPA level, and they found that a lot of their agencies, when it came to doing the cost report, didn't have good, reliable financial information coming out of their billing software or out of their office. So they developed TAD, the accounting department, to help support that. So we are a full bookkeeping service. We do tax returns, cost reports, full bookkeeping, bank reconciliations. We work with you throughout the year for your vendors. And we make sure that all of the data is acquired and accumulated to meet Medicare and IRS regulations. We also offer a full billing service where we bill for not only Medicare, but we bill all insurance carriers. We're billing out of 15 states right now, so we are familiar with a lot of different regional payer sources as well as the Medicare and the other national carriers. So we'd be happy to talk with you more about our services. We can put up our contact information right here. So if you feel that you have a question we didn't answer, you have more questions, or you'd like to talk about services, we'd be happy to talk with you. There's an email address, there's a phone number, an extension, and there's also, at any time, you can go to our website, www.tad-usa.com, and you can contact us and send us emails directly from the website. We also have other webinars that we do, and on our website you can find a link there that would allow you to register for other topics. Doesn't look like we've got any more questions, so thank you for attending today and hope to see you in the future.